In today's video, we're going over another winning EuroCAD trade. We were able to make money on this pair last week and again yesterday. So I really want to break this down for you so you can understand what went into my thought process behind this trade, how I read risk reward, and what my entry signal was. That way you can make better trading decisions going forward. What's up, traders? My name's Austin Silver. For those of you that are new, I appreciate you guys being here with me. I know you're going to find value in this video because it really does stem well off our previous video, which I'm going to link above and below so you can watch that. But really, you're going to see how I'm able to use our ASFX Edge to find risk-reward setups within a trend spanning weeks, sometimes months. So today, we're focusing on EuroCAD. But if you remember, if you saw last week's video, we made money buying EuroCAD last week. So now, since then, all I've been doing every single day, and because the trend hasn't ended, is I've been looking for long opportunities. Now, just because I have that fundamental bias, and I think I mentioned this in the previous video, but just because I have that bias, that doesn't mean I'm looking to take trades every day. You have to line your bias up with good risk reward, with high probability risk reward setups. So some days, you're not going to have those. That's life. That's trading. That's part of this business. But you need to be ready. You need to understand that the trend is either on or off. In our case, it was still on up until today. And if it's still on, you should still be looking for high probability risk reward setups every day along that trend. Now, we're going to flip my screen here so you can see exactly what I was looking at. This morning, I come into the market. You can see today up at the top, it's Wednesday, December 23rd. You can see EuroCAD has actually moved lower today. For those of you that don't use TradingView, these dotted lines here are period separators. We're looking at the 15-minute chart. So each one of these black candles is 15 minutes. Now, if we go back a couple of days, and again, you can see the days separated here. This is where we were buying EuroCAD in that previous video. Off the 50 EMA, my price that day was about 155.41. From there, this thing has moved up. Let's measure it to just be exact. Since last week, this has moved up almost 2%, 1.59%, about 250 pips in 5 days. So you can see this trend. It's very, very clear. Look at how well it's held the blue line, which is the 50 EMA, right? Clearly holding the 50 EMA, not breaking down through support. It's really just showing support at higher lows consistently. So coming into the market yesterday, seeing that we were at the 50 EMA, seeing that the TDI was looking long biased, I was ready to look for long opportunities. And I knew that I was either going to use the 15-minute to find my A1 entry, which is a part of the ASFX Edge, or I was going to look at the 1 minute to find the D1 entry. The D2 entry is another signal that we have, not one that you see me trading too often. I'm normally trading in-trend breakouts or in-trend pullbacks. That's the A1 and the D1. If you want more information on the courses, I'll put links down below. So again, at the 50 EMA here at 4:45, 5 o'clock in the morning, and you can see the time at the bottom of the screen, that's when we were looking for long opportunities. Now, of course, I don't have it on replay mode, so you see that it extended higher and it worked out well. But I want to show you first, again, that divergence that people were somewhat concerned with. And I want to show you why I was able to work through that divergence, still take this trade, and trust the trend. So if we draw it, you can actually go back into yesterday's RSI high and show that RSI is falling. If you line that up on price action, you'll see that price is rising. So that would technically be divergence. Now, if we zoom in even more and we blow up this TDI a little bit, let's just erase those for now because now you guys see that. Let's look at this divergence today. This is the one that I was looking at. I didn't zoom back to see yesterday's overbought RSI. I just looked at today and I saw slight divergence there at high of day. The reason why this divergence, whether it was from yesterday or from today, why this would not keep me out of a long idea is because if we go to the higher time frames, let's go to the 1 hour first, you can see this has been in a clear uptrend since the 17th. Really, since the 16th is when it picked up. But since then, prices held the 8 EMA very, very well. 8 is above the 21, so that's a clear uptrend. Here is yesterday's price data. This is today over here. So you can see how yesterday we were outside the 8 EMA. TDI was in the buy zone. That's great for longs. Take a look at the 4 hour. Same thing here. Price holding the 8 EMA. TDI is in the buy zone. So now the 1 hour and the 4 hour, perfectly long biased for me. On the daily chart, the TDI is kind of in reset, kind of pulling itself up, but price action over the last 5 days is bullish. It's above the 8, 8 is above the 21. So very clearly, the 4 hour and 1 hour are long biased. The daily, on the other hand, is I would say 50-50. So overall, when you look at those 3 timeframes, you're saying that this is long biased. So that's why, even when there's divergence present, I won't completely turn that pair off and look for another idea. The divergence here doesn't scare me because of the higher time frame trend. So when we pull back to the 50 EMA, that's where I head down to the 1 minute, and I'm watching the 1 minute to see if we can develop some divergence that will create a risk level that I could then use to trade off of. Okay? When I say risk level, what I mean I'm looking for is an initial stop loss point that the market is then using as a base structure point to move off of in the direction of the overall trend. I hope that makes sense. Drop a comment below if anything I've said so far isn't making sense. I want to make sure you guys are following me. So here's my divergence, right? And again, all this is detailed in our courses. I'm giving you guys way too much information for YouTube, but I want you guys to see how these patterns repeat. And this is what we teach with our ASFX Edge in the courses, like I said. So RSI low at 3:07 in the morning, price action comes lower at 3:30, boom, our divergence is set. Now I have my bottom, so I'm going to draw a support zone down here. I know that if price stays above that, we're going to see this thing move higher because of the higher time frame trend and the perfect 15-minute setup. So when I woke up, you guys know I get up typically around 5 a.m., price was sitting right here. I saw this point as a higher low off this point. So going forward now, this is my new stop loss. I ended up taking my entry when it pulled back and sat at the 50 EMA, that blue line again, here on the 1 minute. That has become a really solid entry signal once the D1 is already set up, which is kind of the part that I'm leaving out, again, because we teach that in the course. But once the D1 is set up, this type of a retest was the same entry I took in that previous video on this same pair last week. Make sure you watch that so you see it's the same thing. This has been really profitable for us. So when it comes to the 50, I know my stop is going at this pin low, 11 or 12 pips or so. And I'm looking to see if we can get at least 2R out of this trade. 2R would be about 24 pips. If I'm risking 12, 2R is 24. After an initial push from when I took my position, it goes up about 1R right here. You can see it pulls back down. But in this pullback, I trusted my stop. I stayed patient because I knew it could just be creating another structure point, another higher low off that original bottom back here, this blue zone. So now we're still showing strength, still looking like we're going to move higher. As the trade developed, I'm going to drag this over so you can see. Whoops. You can see as the trade developed, it ends up continuing to make structure points that give us a new risk level. Meaning, when it pulled back here at 8 a.m. to the white line, which is the 200 EMA on the 1 minute, that pullback on the 15 minute, I'll show you where that looked like. That pullback was right to the 21 EMA right here, and it was holding the 8 EMA on the 15 minute, which is not a sign to get out of this trade yet. The first exit sign is when it broke the 21 EMA way over here at 10:30, 2 hours later. So you can see from the entry, it extends over 4R, not to ADR. ADR was 102. It looks like that because it ended up coming lower and pulling ADR down. It didn't move to ADR, but it still moved over 4R. 12 pip stop, it goes 50 pips. Notice in this retest too, and again, I'm giving you guys so much information for YouTube, so I hope you're listening. See how I had my divergence drawn like this today, right? Remember how that RSI was falling and then price was rising like this? Look at how it retested that divergence line. Now, when I was in this trade, it popped through the divergence line and left a pin there. You can see that pin right here, right? So when I had that pin happen and it came down, tested the 50 EMA again here, and then ended up coming through that divergence line, I took a little bit of profit off the table here as it came up to the divergence line because I didn't know that it was going to push like this. I knew that previously it had shown resistance already to the high of day and we were divergent. So I was like, listen, I'm not going to get stuck in another pin. So I took a little bit off there. And then as the trade moves higher, the way that I manage these trades is I'm moving my stop loss up at R multiples. So at 1R, I'm taking off a little bit of profit because we pin that divergence line again. You see the divergence line here on the 1 minute now, right here. So again, I didn't take any profit here, pulls back down, comes back up. That's where I took off a little bit. Once I see it move up past 1R going into 2R and 3R, then I'm looking to move my stop loss from down where it originally was up to here into profit so I can't lose any money if it does want to come back down. So I did that once it started to pull back down towards the divergence line. I wanted to say, hey, I know this pinned it before and it came back down. I want to make sure that it doesn't do that again. So now that it's coming back to it, I know it can hold and I know it can break through. So you lock the stop, you take some profit off, and you let the market be. And what happens? It ends up continuing in the direction of trend, moving higher, and I was able to move my stop loss up and piece myself out at each R multiple, a little off at 3R, a little off at 3.5R, and I detail how I piece out of these trades in our daily Facebook recaps for members that have taken the courses, and it's also in the courses as well in a risk management chapter. But I don't want to spend too much time lingering on that stuff. So now you guys kind of get the whole idea for this EuroCAD trade. You get the idea of how I'm using the divergence to read risk reward and identify the stop level. You get to see how I'm using that divergence to then create structure to give me even tighter risk reward setups. And I'm using the higher time frames to determine the trend and the direction that I'm going to trade. And you can see how I'll ride that trend for multiple days, multiple weeks. It's funny because I'm getting ready for our trading accelerator event. It's in Clearwater, like one town over from me in Florida, in about a month. It's mid-January. And I'm putting this PowerPoint presentation together with all of my research that I'm going to share with the traders that are coming. And I'm using Euro USD as a case study because of the trend that it had from the beginning of November 2020 all the way through until about a week ago, just mid-December. So it was like a 6-week bullish trend as the dollar was coming lower. You might have seen me talking about this before, but that's a perfect example even there of how we can see that trend and be buying Euro pairs, Euro USD in particular, almost every day, keeping that bias. So ride the trend, guys. If anything you take from this video, just ride the trend. But comment below. Let me know, out of everything here, was there anything new that stuck out to you? What are you looking to implement more of in your trading? And if you have any specific questions about the divergence or the A1 or the D1, whatever it is, please email me, DM me, drop a comment. I try to get back to everybody as best I can. But thank you for the time. I appreciate it very much. If you did like this video, if you do find value in it, give me a thumbs up. Make sure you're subscribed. I see the analytics. That's how I know what you guys want to see more of. So thumbs ups and subscribes definitely help. Again, I appreciate the time, everybody, and I'll see you in the next video.